You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 31st day of August, 2020. Hard to believe, isn't it? Already at the end of August. Wow. Another year has come and almost gone. Well, happy Monday. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That'll give you one-click access to the show each and every day. When you join that way, you'll have access to the chat box so that you can ask questions and participate in the discussion. You also get a reminder every day via email right before the show starts, so that's where you'll find the link that gives you the one-click access, okay? Now, on days you're out of the office, away from the desktop, not to worry, point any internet-connected browser to cfrn.net cfrn.net/live. And there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during the broadcast on Facebook, on YouTube, and Twitter. Let's open with a word of prayer. Heavenly Father, we thank you for all of your blessings in our life, for your mercy and for your grace. God, we thank you for every person that's here as a part of this audience today, this gathering. We thank you for each mind, each heart that feels the presence of this broadcast. Only you truly know what we are setting out to accomplish today. We have our own ideas, we have visions, hints, even daily instructions that you whisper to us. We have talents and abilities and time to work. However, only you, God, see in perfect detail the end of every beginning. Every project, every season, every life, nothing is ever in vain. For even mistakes and missteps are used for good for those who love you and are called according to your purpose. Your righteousness transcends all of our efforts and understanding. Forgive us, God, for our pride, the pride that puffs us up and the pride that threatens to unqualify us, because you love a humble man. Strengthen our confidence in who you have made us to be. Set us free from comparison in order to work together as one body, the way you intended. Lord, we just pray for your blessing upon this broadcast today, upon every person that's present, as well as the lives of those who will hear this broadcast after the fact. It could be a week, could be a month, could be a year. I believe, God, by the power of the Holy Spirit, that you can touch even those lives out in the future. We thank you for today. Ready us right now to make every moment of this day count. In Jesus' name we pray. Amen. Okay, let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. We'll start here in the U.S. The Dow is down 205 points. Now, the Dow is having its best month, I think I read, since 1984. So I don't think one down day is going to throw us off that. But the day's not over, is it? NASDAQ up 77 points. S&P 500 down less than a point. Russell 2000 down 11. Really no movers, no shakers in that bunch. In the commodity basket, crude oil up 12 cents, trading 43.09 last. Gold up $1.90, trading 1976.80 last. Silver up 58 cents, trading 28.37 last. For silver, that's a gain of about 2%. In the Asian markets at the close, the Nikkei was down, the Nikkei was up 257 points, which is a gain of a little over 1%. Shanghai down 8, Hang Seng down 245 points, which is roughly 1%. And in the European markets at the close, FTSE down 36, DAX down 87, CAC down 55. For the CAC, that's a drop of about 1%. So we have a mixed day in Asia. Red day in the UK, and worth noting, it's a banking holiday today in the UK. And here in the US, it's mixed, with the NASDAQ being the only one in the green, up 77 points so far on the session. With that, let's go to Michael and get a recap of everything that happened this morning in the live training room. Michael, if you're ready, you can take it away.
I am ready.
Nope, no charts up yet. Michael's getting ready to bring up his charts right now. And then I will bring mine up after he finishes, and we'll take a look at the Concierge Trade Alerts and the Logic 247 alerts so far this week. Okay, Michael, you're locked and loaded and ready to go.
Excellent. Okay, let me bring this over. Here we go. This is what I wanted to show. All right. So if you're going to read the spreadsheet, well, first of all, if you want to become an active partner, then all you have to do is go to EminiFuturesTrading.com and just follow the instructions there. Okay. Today is, if you're going to read the spreadsheet, now I got to say this. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 31st day of August. It's the last day of August, 2020. Today made 29 ticks in the euro, 39 ticks in gold, and 16 ticks on the ES. Put us at plus 771 and a quarter on the morning session. Today it took 12 minutes and 3 trades to get to the goal for the day. At that point, we're up 167.50. We took a total of 9 trades this morning. Now, I'll go over how many trades there were. I mean, there were a ton more than 9. But, at the end, I was just reading through it and letting people know what was going on. But on the month, we're going to end the month up $10,145 per contract. That's over 21 trading days, averaging $483 per contract per 2-hour trading day. And today is my 136th consecutive day of getting the goal. On the year now, we're at $63,456. That's over 161 trading days, averaging $394 per contract per 2-hour trading day. And as you will now see, there are a lot of trades that are missed for whatever reason. Crude oil was just a miss today. So, I'll show you crude. There was one trade opportunity in crude. But gold was all over the place. So there was, a ton of opportunity with gold. So you know what? I'm going to start from the other side and end with gold. Okay. On the ES, we had an 8-tick short right here. Now, this was a YBR trade, but it was also a bounce off the BBC trade. Okay. And we had another 8-tick short right here. That was just a close below the trend line trade. And I don't think we missed anything. No. See, it was hovered around this weekly trading zone all morning, which happens to be right at the 3,500 level. So that's kind of a big level. And that was the yes. Now, crude oil. See what I mean? Ugh. They actually didn't have any trade setups in crude. And then we had YBR trades that worked. There was one right there, 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 and one happening right now. But those were the only types of trade setups that that were valid on crude for the morning session. The euro. Now we had a couple of trades on the euro. One short one and one really long one that I didn't write down, or that I didn't mark down. It was right here. Okay, this was the first trade right here. We picked up 6 ticks on that. And this was the second trade right here. We picked up 23 ticks on that. Okay, now there were some YBR trades to be had in there. And if you don't know what the YBR is, set up a meeting with me and we can go over it. Right. Now, gold. We had 5 trades on gold that we actually did, but there were a whole bunch that we didn't do. Now, YBR trades, there were plenty. There's one there, one there, one there, one there, not there. But let's go all the way back to the beginning here. Okay, the first trade on gold was right here. It was a short, and it was a trend line trade. Picked up 3 ticks on that one. Now, there was a YBR long trade there. And this was our next trade on gold. We picked up 10 ticks on that one. Looking, you know, there were a bunch of YBR trades in there. Like there. But this was a bounce off BBC and trendline type trade right there that I missed. This was a trendline trade that I missed. YBR trade. YBR trade that would have been a break even. This was a bounce off the BBC and a YBR trade. It was also 128. I mentioned it in the room, but I didn't do anything with it. Okay, now this one here was a bounce off the BBC, and we picked 14 ticks on that one to put us at plus 27. Okay. Man. Okay, and here we picked up 11 ticks on this trend line trade. This trend line trade to bring us up to plus 38. We had a break even on this trade and plus 1 tick on this to bring us to plus 39. And I was kind of worn out by then. We missed a trade there. We missed a trade there. We had a break even trade there. And then we're getting into the break. There was a trend line trade right here that would have worked out just fine. And during the break, it got really choppy right here. It was a slow grind up, but didn't really give any trade setups. And then it tried to give it back with a bounce off the BBC and a YBR trade right here. That would have worked out just fine. There was a trend line trade right here. That would have worked out just fine. And that was it. That was it for the morning session. So again, yeah, I know gold is, you got to really be on your game and really focus just on gold if you're going to trade it. Because a lot of the trades are just so fast. They are so fast. And like today, I got in a bunch of break-even trades because I wouldn't say I got in a bunch of break-even trades, but I got in a couple break-even trades where I probably could have taken 8 or 10 ticks profit because it was moving so fast and I was distracted. Now, if you want to be part of the CFRN family, go to EminiFuturesTrading.com and just follow the directions there. Okay, EminiFuturesTrading.com. Let me bring the spreadsheet back up. Sorry, I'm speaking distracted. I just got distracted by 2 text messages. Today is the 31st day of August, 2020. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today we made 29 ticks in the euro, 39 ticks in gold, and 16 ticks on the ES. Put us at plus 771 on the morning. And today it took 12 minutes and 3 trades to get to the goal for the day. At that point, we're up 167.50, and we took a total of 9 trades. So on the month now, we're at $10,145. That's over 21 trading days, averaging $483 a day. It is now my 136th consecutive trading day of getting the goal. It's never been like this before, guys. I've never gone 136 days without having 1 down day. And so far, that's really what I've had is 1 down day. We're on our 161st trading day of the year, averaging $394 per contract per 2-hour trading day. And as I just showed you, I missed a bunch of the trades. And on the year now, we're at $63,456. Okay. All right. With that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready.
Okay, good.
Okey-doke. That should do the trick. Okay.
Okay, I
Recap
can
and
see your
recap.
screen. Today, 12 minutes, 3 trades, 167.50.
Good job.
Thank you.
Okie doke. Now, let me bring this up real quick. I was in a mentoring session last week, and I was going over the results that we had so far last week, week 108. Now, week 107, I'll remind you, we've averaged 20% of Logic 247 alerts getting stopped out each week over the last 108 weeks now. We're in week 109. This week, you can see that 22% of the action, we had 69 actionable, 15 stopped out, so 22%. The week prior to that was 12%, but the average has been 20% over 108 weeks. So I was just I was going through the alerts, and we were talking about each individual one during the mentoring session. And then as we were wrapping up and about to each go our separate ways, he said, wait a minute, hang on. And I said, yeah. He goes, are you saying that you actually sent these out to people before they triggered? I said, well, yeah. That's kind of how we like to do things here. It doesn't do you a lot of good if somebody, shows you a historic chart and just says, well, you could have got in here and you could have got out here, and if you had done that, well, things would have been real nice. He goes, well, yeah, but that's kind of what everybody does. I said, well, we don't. In the morning when you're in the room with Michael, you're watching him put on and take off the trades right there, live in real time. In the Logic 247 channel, the alerts are coming out around the clock, 24/7. Well, not quite 7, because the market is actually closed on Saturday. We're trying to fix that, but so far we haven't had any luck. Sunday night, 6 p.m. Eastern, that's when we start. And this channel stays open for business right up until Friday afternoon at 5 p.m. Eastern. The markets do take a break each day from 5 p.m. to 6 p.m. Eastern. So last night, Sunday night at 6 p.m. Eastern, that was the beginning of the Monday session. Tonight at 6 p.m. Eastern, well, at 5 p.m. Eastern, that will be the close of the Monday session. And then 6 p.m. Eastern will be the open of the Tuesday session, even though here in the U.S. it's still Monday night. He said, so seriously, you sent these out before? Yeah. And so then we went back to the charts and I walked through them again. So I just want to make sure that everyone in the audience really understands, In fact, I took the time last week. Valerie has started adding the swing high of that particular move to the alerts when she does the recap. And so I actually went through last week and did the math on, I think, almost all of the alerts from last week. The first one a week ago Sunday night was to be long, 3403. First target, 3405. Potential resistance or second target, 3406. Potential resistance or third target, 3418. And the swing high of that move was 3421.50. Eventually we traded above 2150, but that was the swing high of that move at the time that the recap was done. So that's a 15-point move at $50 a point. $750 per contract traded. He said, well, then I would only need a few of those in order to be able to pay for my passport. I said, well, I'm glad you said that, because so I didn't have to, because I don't. We're not big on the whole closing the deal, ramping up the sales, all that kind of stuff. I mean, yes, this is a business, and we are always happy to see someone become a part of the family. And we are a peculiar people. Now that's from the Bible, that's not from me. No, we are people set apart. We do have something here that we cherish. And so it's in that spirit that God, I really believe, has brought together a group of people for a common purpose. We share a common belief structure. We have a lot of the same ideals. You don't ever hear anybody in the chat room or in the discussion group talking about, the bigger house or the faster car or the things that you typically would find in these, trading type chat rooms. A lot of these message boards that you go on in the investing world and trading world are kind of dark, dismal places. Everybody seems to have a chip on their shoulder. They're mad at the guru, or mad at the indicators, or mad at the broker, or just mad. Not everybody's mad, some are sad. But if sad people hang around mad people long enough, they'll figure out how to do mad as well. So I went back through the alerts again, and it was like he was seeing them with fresh eyes. Wow. Now, this isn't because we have some big secret or we cracked the code. It's just based on logic. And by logic, I mean how markets work. Since the inception of the markets, long before they created E-minis, any kind of market, price trades between support and resistance. And from resistance, it goes back to support, and from support, it goes back to resistance. I mean, that's just logical, right? But this industry has obfuscated that very clear idea with a million indicators and oscillators all promising to predict the future. Well, I guess a person can predict the future, but no one's going to be right with certainty all the time. It's not possible, because if that were possible, that would mean that you could actually tell the future or know the future, and God did not give us that ability. He did not give that to Adam. Henceforth, none of us have it. Now, a lot of the websites you visit, it would certainly seem that somebody cracked the code and people can now predict the future with great certainty. Well, we won't insult your intelligence and try to, hoodwink you that way. We don't have any magic tricks or parlor tricks or any of that nonsense that makes it so difficult for a person to learn how to trade. You don't need a magical indicator or mystical oscillator to be a consistently profitable trader, but you do have to understand how markets work. And markets follow a logical procession from support to resistance, back to support, back to resistance, over and over again and again. So I said all that, I guess, to say this week we're in week 109, and so far that was last week, week 108. We had 55 alerts, one carried over, so we had 48 actionable alerts. Out of the 48 actionable, 4 got stopped out. That's 8%. Now that's based on not risking more than $300 per contract per trade, less when possible, based on a very simple, logical, 3-step methodology that I teach all of our traders. When you become a member, one of the first things you should do is book a one-on-one mentoring session. And that's one of the first things we'll cover is how to look at the chart. And just based on what the chart tells you, how to know where you should put your stop. Now, does that mean it's always going to be a profitable trade? No. Getting stopped out is as much a part of trading as breathing is a part of life. The sooner you accept that, the sooner you can move forward. The sooner you can actually start to build a profitable trading business. Even though all professional traders and all consistently profitable traders get stopped out, most new traders spend all of their time and treasure trying to figure out some magical thing that will prevent them from ever getting stopped out again. Well, guess what? That thing doesn't exist. It's like looking for a black cat in the dark that just isn't there. So you can continue to spin your wheels looking for some way, that secret, right? But I'm just telling you ahead of time. Many have come before you and spent much time and much treasure also looking for the thing that doesn't exist. So if there is no magic, if there is no secret, if you can't tell the future, well then what's left? Logic. Applying logic to how markets work allows you to have a very good, consistent idea of what will happen next. Now, knowing with certainty what the next high probability move is very different from knowing the future. But that line seems to get blurred a lot in this industry. Now, we went from a week of having 100 alerts to a week of only having 55 last week because of market conditions. The S&P is up to the all-time high, and, well, if you were here, if you traded through it, you know exactly what I'm talking about. Now, last night, 6 p.m. Eastern, the channel opened for business as it does each Sunday night. Since last night at 6 p.m. Eastern, we've issued 13 logic alerts. Remember, we have two kinds of alerts. We're just talking about the logic right now. We issued 13 alerts, 11 actionable because we're still waiting on the results of 2 of them. We don't have anything stopped out yet. Trust me, that will change. Okay. I don't think we've never had a week where there was 0. Okay. Remember, the average is 20%. So the week got off to a nice start. We'll see what the rest of the week brings us. We didn't have any high impact news this morning, and I think we only have one tomorrow at 10 a.m. Eastern. So I think later in the week I heard Michael mention that we have some pretty big economic reports. Now, we don't trade news. We don't even trade the reaction to the news. What we trade is the follow-through to the reaction to the news. And that's all very logical. So, this week, week 109, nothing stopped out yet. 11 actionable alerts. Let's take a look at the other alerts. Now, those alerts come out live in real time, round the clock, starting Sunday night at 6 p.m. Eastern. So you might get an alert at 2 a.m., you might get an alert at 2 p.m. Obviously, you have to sleep at some point, but there's traders all around the world. So our alerts sort of follow the sun. You know, once Wall Street closes, and then the futures market closes this afternoon, Globex opens, then Asia opens, and then at 3 a.m. Eastern, London opens, and then Wall Street opens at 9:30. And we just keep following that right on up until Friday afternoon. Now, those logic alerts are based on current price action, what's happening right now. Okay, but you always have time to get to your platform in order to put the trade on. Okay, it's not like an alert goes out and 2 seconds later it triggers. Every now and then the market might all of a sudden jump, and maybe you're only halfway to your desk, but that's a pretty rare occurrence. You're more likely to wait an hour for it to trigger than for you to not be able to get there in time to actually take advantage of it. So those are the logic alerts. Okay. The other alerts, the ones that we've published for, boy, I want to say it's almost 7 years now. I should look that up. They're called the Concierge Trade Alerts. Okay. Now, these don't come out around the clock. These come out shortly after the Globex open. Okay. Globex opens each night at 6 p.m. Eastern. These were published last night at 6:45 p.m. Eastern. We cover the S&P, the Dow, the Russell, Crude, NQ, 10-year notes, which we've now rolled to the Z contract, gold, Canadian dollar, euro, British pound, and silver, which we've also rolled forward to the December contract. Now, actually, these were published at 6:24. I mistyped here. There's always a timestamp, and when you hover over the timestamp, you'll see the date. Now, the time you see down here on your end on Telegram is going to be Pacific time. For me, if you're Central time, you'll see Central time. If you're on the East Coast, you'll see Eastern. The way Telegram, this messaging client, and by the way, if you're new, that's, I said the first thing you should do is book a mentoring session. That's probably the second thing. The first thing you need to do is get Telegram installed. It's just a messaging client, okay? You've probably heard of WhatsApp. Telegram is the second most popular messaging client. It's the one we've chosen to use. It's fast, it's secure, it's free, and there's no advertising, okay? We use it to put out our concierge alerts, our logic alerts, the weekly trading zones. Man, you name it. We've got a discussion group going. We even have a channel where we just shoot the breeze. If somebody has something interesting they want to share that's not directly trading related, we have a channel called Breeze. So if you're new, make sure you're connected to all the different channels so that you have access to all the different resources that are available to you. So hopefully you've had time now to take a screenshot of this. Weekly trading zones are issued in the Weekly Trading Zone channel on a Monday morning at 6:15 a.m. Eastern. That's when they're published, and we've published them since December 14th, 2009. You want to get to your chart, and you want to get those zones on the chart. Now, this is a daily chart. Last week, we plotted the Fibonacci price extension target for the market, because where we typically looked left for that kind of guidance, because we're at all-time historic highs, look left, there's nothing to see. So what I did this morning in the pre-market strategy session, let me show you. Shrink it up a little bit. Okay, I went from the pandemic low, March 23rd, to the high that came in right where we were anticipating it. What was once support became resistance. See, that's just how simple our method is. And some people would go, yeah, that's old-fashioned, that's horse and buggy. You can't trade like that anymore, man. Don't you know we got algorithms and stuff? Yeah, I know. We're well aware of them. We just don't use them. We just stick with what's simple. Not easy. There's nothing easy about trading. Trading's not easy, but it can be simple. This simple. So anyway, from the low to the rally high at that point, to the retracement low, price pulled back to the BBC. Price always reverts to the mean. Just so happens that our mean is green. So you'll see on this retracement, where do we go? Right to the BBC. When we approach from below, we expect resistance. We got it. When price runs into resistance, it goes and looks for support, which it found. That support took us above the BBC. Now, BBC just means bull, bear, cross. Okay? Again, very simple, very elementary. When price crosses below the green line, we are bearish, or we're simply looking for lower prices. Okay? When price gets above the BBC, we're bullish or simply looking for higher prices. Now on the way down, you can see that we put in a big leg. Again, this is a daily chart, and a retracement, and a leg, and then this green day would be a retracement, and then a leg, and a retracement, and then a leg, and a retracement. And if this trend were going to continue after this retracement, we would need to put in a lower low. Like here on this leg, and then we got a retracement. See how we took out that low? And then after this retracement, we took out that low. And then after this retracement, we took out that low. Well, on this leg up, we ran into resistance. We pulled back to support, and support prevented us from going down to take out that low. So that's our first indication that this downtrend might be over. So once price gets back above the BBC, now we're looking for higher prices. And just as the market built legs to the downside, it went leg, retrace, leg, retrace, leg, retrace. Here, we're doing the exact same thing, but in the opposite direction. Leg, retrace, leg, retrace, leg, retrace. Big leg, right up to the area that we were. This rectangle's been on this chart for a long time. We hit resistance. What do we got to do? Go look for support. Where'd we find it? The BBC. Then, let's talk about this blue and climbing and red and falling for a minute. Blue and climbing represents bullishness or support. Red and falling represents bearishness or resistance. So when we came down and found our support at the BBC, we tried to build that next leg to the upside, but we kept running into red and falling. We spiked it and spiked it and spiked it and spiked it. It wasn't until red and falling itself came all the way down to the BBC. We caught our turn, so we still have that same thing going on. Leg retracement, leg retracement, leg retracement, leg retracement, leg retracement. Now, on this move up, we didn't take out this high, but we also didn't take out this low. That put us back above the BBC, and here we go. Leg retrace, leg retrace, leg retrace. And this is, I'm sure, what a lot of folks are calling overbought. That's not a term that we use. I mean, there are indicators that will tell you when market conditions are overbought or oversold based on, there's lots of different conditions that can be programmed in to an indicator. Okay, measure this, shake that, rattle this, and when this number exceeds this number, and print this on my chart and tell me it's oversold. You can go into those settings and you can change them all around to, 369, whatever you want. It's man's perception, one man's perception, then other people look at it and go, oh wow, that is magical, or that is mystical. I better buy that one too. Pretty soon you got so many indicators on your chart telling you so many different things, you end up with analysis paralysis. And that's not a good place to be. So, from this low, from the low back there, the pandemic low, to this recovery swing high, back here to the swing low. Yeah, and let me tighten that up. Get as close to it as we can. That's pretty good. Now, 14th century math, Fibonacci. Most people are familiar with Fibonacci price retracements. I've got those on here too. But this entire leg up, if we keep moving higher, Fibonacci, the golden ratio, I'm sure you've heard those terms if you've been around trading any length of time. That math No politics involved, no trade tariffs, no rioting, just math. Gives us a number to look to up here, 3566, because remember, we got nothing to, we look left, there's nothing there, because we're at all-time historic highs. Now, from this last leg, in fact, now that I've put that up there, let me just get this off, clear the chart up a little bit. Okay, yeah. So, let's just do the Fibonacci retracement on this last. Actually, let's do just the last leg up, because we were still leg, retrace. We want to catch just this up leg. So we take our retracement tool and we go from the swing low to the swing high. Okay, and the 24% Fibonacci retracement, not extension, but retracement, the math, no riots, no pandemic, none of that, just math, says that price will, there's a high probability price will retrace back. Well, we know that price always reverts to the mean. We've covered that, right? But now we have something to layer on top of it, which is very basic, very simple, called math. I know math can get complicated, but once you understand fibs, you know, there's a lot of expensive fib software out there, but it doesn't do anything that you can't do yourself with the free fib tools that come with every charting platform I've ever seen. So what's the high probability move from here? Well, if this is the swing high for now, if that's as high as we're going to go on this move, 35, 24, 50, seeing that 24% line right up with the BBC, well, that's a high probability move. The only issue is we've got potential support right here. Why there? Well, because you got the step line, you got blue and climbing. So before we're ready to start, you know, putting out maybe some big picture ideas about how far price might drop, we need to see price get below the step line. We need to see price get below blue and climbing. And then, now, that retracement should be good for a very nice bounce. Question is it just a bounce? Will it be just a retracement of the first leg down, or will it actually be a reversal? You know, if I could tell the future, I would tell you, but I can't. So what we have to do in the interim is trade what's in front of us. So we'll watch to see if price gets below these. If so, then we've got a pretty nice window of opportunity right here. From 34, call it 34.64 down to 34.10, so about 50 points, okay? But again, we'll trade that on the smaller time frame. Now, for a smaller time frame, whenever I post in the discussion group, and if you're new in that discussion group, you can scroll up, okay? The one that we use the most, it says Alert Trial Discussion Group. There's two, but that's the one that has the most traffic. You can scroll up for months and months and months on end, and you'll just see chart after chart, discussions, questions, answers, setups, etc. Just know that every chart you see me post is always a 30-minute chart unless I otherwise note it. I mean, sometimes I post a daily chart, sometimes I even post a 5-minute chart. That's about the extent of it. So if it doesn't say anything, and if you're scrolling up, you know, learning by working your way through the discussion group, just know that my default go-to chart is the 30-minute chart. So here we had the Globex open last night at 6 p.m. Eastern. We gapped higher on the open. The closing price on Friday was 35.0675. And the open last night was 35.08.5. So there wasn't quite 2 points there. Now, we know that with index futures, gaps close a high percentage of the time. How high? Well, almost always. Since we didn't have a full 2 points to work with here, I decided to just let nature take its course, and it did. We came and we filled the gap. But we took advantage of the upside movement of the market. So the first Concierge Trade Alert. Now again, you got to separate these two in your mind. Logic's coming at you live in real time, around the clock, based on current price action. This is a static report. It comes out once per session, but the numbers are good for the entire session. And on most days, we see these trigger multiple times. Okay? Not unusual to see one of the concierge alerts trigger twice, 3 times, 5. You know, it's all based on market structure, and it's based on the fact that important prices and important areas are almost always tested. If you take nothing else away from your experience with us, remember that. It will serve you well. Okay? So the concierge alert was to be long 35.19. Okay. And the swing high was 35.24.5, so that's 5.5 points. Let's just call it 5. It's a few ticks. So 5 points at $50 a point. It's $250 per contract traded. Now, John's on the line, so I'm going to open up his mic. When we finish talking with John, we're going to go through and we're going to recap and talk about each and every one of these. We're also going to talk about each and every one of these, okay, from last night and this morning. So John, let me get your mic open. I'm coming. All right. Okay, John, welcome to the show.
Hi there. Thanks for the invite.
Hope you had a good weekend.
Unfortunately, I didn't. I kind of a miserable one.
Oh,
Health-wise,
I'm sorry.
Just kind of stomach flu, but I'm a little bit better today. Thanks. Anyhow, listen. This is like an historic interlude here, where we're making all-time record highs as we speak on the Nasdaq. And this S&P and the Dow got knocked down this morning, and it's really kind of a very difficult market to get your arms around. But I'm happy to tell you that in spite of my ailments, I'm onto something. I've been kind of hinting about it for a number of weeks. And I had this kind of an epiphany last week, and the stuff that...
Here's the... Guys, we were just looking... we looked in depth at the S&P 500 daily chart. Now, look how much different this MQ is. It's had an incredibly bullish upside.
You know what, Dwayne, I got a feeling this, I've been saying it for a while, I think it's going to go parabolic. It's already going parabolic, but it's going to go more parabolic. And, you got AMD today, which is performing, it's up $5. It's very, very strong. It's pushing the semiconductors higher. But what I want to tell you, I'll get onto some of the issues in a minute, but just the overnight, we have this kind of a routine that's been established now over a number of weeks, where, you know, it's a pretty good idea to go long, or if you're not long going into Friday, you should be, because Sundays tend to continue. And we had a you know, modestly, just a firmer opening, started out 10, 20 points higher on the NASDAQ, ended up about 90, I think up about 90, 100 or so. And it's kind of interesting because, like, I took a look in during the night and thought to myself, I actually told the guy, you know, we're probably going to be up 100 to 200 coming in the morning. And what I actually found out is I kind of discovered a kind of an inflection point overnight, which I have subsequently implemented into my trading. And it called a top right there and then, you know, like an hour or half an hour later. And we had this decline, you know, down into the open, where we went maybe slightly negative or just about unchanged on the NASDAQ. And, you know, then we did the Monday morning liftoff, which is usually a Monday or Tuesday routine that we've seen for a long time now. And here we are now. We ran up, and then we had a very sharp pullback, and we, you know, kind of retest. So, you know, we were dealing with a pretty powerful market, because what I have to tell you is this stuff that I'm in the process of developing is incredibly capable of actually giving you a sense of, you know, the hardest thing to do in trading is to take a position with, you know, not knowing if it's going to go a little bit or a lot or reverse on you. You know what I mean?
Sure.
So to be able to actually see the strength in the market and that it's going to go higher is remarkable insight and to have. And same thing happened with the gold overnight. In fact, the gold ran up Friday and it pulled back a bit, and you know, even though we were higher in the gold, we ended up dipping during the early hours, as you were probably watching. And but what's interesting, I kind of got the sense that the gold was just having a pullback, and it started giving some pretty strong buy signals again. And look at where we are today. You know, we're up, you know, $28.50 on silver. You know, we're almost back up to the highs, and here we are going into the end of the month. So it's not, unless we have a real big surge this afternoon, I guess we're not going to quite close, you know, the highs of the month, but good enough, pretty impressive nonetheless. And the fact that the silver is as strong as it is, and, you know, we did say, as a matter of fact, if you remember, after the first pullback, I did say I had the mother of all buy signals, remember that, on the gold and silver, potentially, and it turned out to be the case.
Right. You need to get them.
So, yeah, hold on.
Go ahead. While we're talking about the NQ, guys, last night's alert for the NQ was to be long 12055. Now, there was also an logic alert. When logic and concierge point their finger at the same important price, important area, that's where you will find some of your highest probability, lowest risk trade setups. But from 12055, we put in a swing high at 10291. And so, can imagine who might have run off with my calculator. I guess I could just do it in my head. But it's Monday. So the swing high was 91. And the entry was 55. So that's 36 points at $20 a point, $720 per contract traded. It was right in front of me. Amazing. $720 per contract traded. That's what the market made available. Okay. Now, we did say important prices, important areas are almost always tested. So this first move, 55.91, $720 per contract traded. And then we got below the trigger to trigger again, but you don't ever trade an alert just because it's an alert. It's important that you go and look at the chart and make sure that market structure actually supports trading the alert. Now, typically the first trigger will, and quite often, the ensuing triggers will, but because market structure changes, and I'm going to show you exactly what I mean. If I put the indicator back on, okay, you see how this entire move here from the open, okay, climbing the back here of blue and climbing. Okay, are you back?
Sorry about that.
Okay. All right, guys, I'll pick up right here. We don't want to go long on this trigger because we would be trading right into resistance. So I'll explain more about that when we're finished talking with John. Go ahead, John.
Yeah, it's funny. Before the pandemic hit, if you remember last year and going into the end of the year, we talked about the March bottom, which amazingly happened. And I kind of, look, election years it's a little bit like 2016. Remember, 2016, we rallied into late 2015, right into the end of the year. And then, literally the first few days of the year, bam, the market got knocked down pretty sharply. And, then there was a rally after mid-January low, and we rallied up into the end of the month, and then there was another hit into February. And if you remember, the same time, that was when gold got hit, and then we had this massive rally for 6 months on the gold going into the election. So the thing is, there was a big hit at the beginning of the year in 2016, and if you remember, one day when I got more time, I'll explain the theory behind the whole Trump win and the rally and everything else. But there were two very powerful components to Trump winning, obviously. One of them was his tax cut, which he announced around about September the 28th or sometime of 2015. And if you remember on the show, we said probably going to go up a couple of thousand points into the end of the year, which we did. When we got up a couple of thousand points, then we got the hit, and we sort of went down and tested the original tax cut entry point, if you like. And guess what that date was? It was February the 10th, I think, of 2016, which was the day Trump won New Hampshire. So, they say presidents, I was for corn, New Hampshire picks the presidents, and he ended up becoming president. So, but really we rallied all the way from that bottom pretty much into the election. So that was, that's a guidance as to the way 2020 is shaping up, pandemic or not. We said we'd get a big hit. We thought we'd get a big hit, in the first quarter, second quarter, and we did. And here we are now, in spite of it all, hitting new highs in a way that's hard to fathom, frankly. But it's kind of a replay of 2016. I thought I'd point that out to people for their benefit, because there's no guarantees. I mean, the way things are going right now, corrections. I mean, we're having a bit of we're having these short pullbacks like overnight. But look at the market now. And actually, we put in a pretty good bottom this morning on the Nasdaq. And look, I mean, you can never say never, but generally speaking, if we're going to make an orthodox top, the NASDAQ at some point will underperform, basis the Dow and the S&P and stuff. And as you know, we saw them move ahead last week, with the NASDAQ kind of taking a bit of breather. And here we are now with the NASDAQ reasserting itself again this week, meaning that, the Dow, which is hovering around like 28,500 right now, still has the capacity to go to 30,000 or more, possibly before the election or going into it. So you have to keep that in mind, because there could be a big surge in the Dow, maybe not necessarily tomorrow or the next day, but at some point, maybe this month or next month. And while, and right now, the way, I actually took a look at the market caps this morning. We're 2.25 trillion on Apple already. Seems like the new norm. We got the four horsemen, 100 billion plus, the richest guys in the world. And Google actually is kind of also around right now. It's barely over $1 trillion. Amazon's almost, is probably the next 2 trillion contender. And Facebook is, and Tesla's heading for 500 billion. So it's really incredible what's going on.
Yeah, let's take a look at Tesla here. That stock split is in effect as of today, correct?
Well, I guess I was wrong about the split.
I'm sorry? No, it is effective today, right?
Yeah, but there's no pullback. I thought there might be a pullback, but it's kind of like
well, I think it's a situation where, okay, what price were we trading at the close Friday without the split factored in? What was Friday's high?
Tesla was 2,300-ish, somewhere like that.
Okay, so people come in today and they go, now guys, please hear me. This is faulty thinking. Okay, don't fall prey to this. But people come in today, maybe people that don't really understand stock splits and all these other kinds of things, and they go, oh my goodness, I get a chance to buy a $2,000 stock for $500. Who wouldn't want to see that?
Got 4 or 5 times the stock.
The point being is, well, no, there's the faulty thinking is that it's no longer a $2,000 stock. It's now, and whether it deserved to be a $2,000 stock or not, that's beside the point. But the way people see it is, oh wow, it was 2,000 and now I can buy it for 500. That's a great bargain. I got to get some. But there's now 4 times as many shares as there were on Friday. That's that doesn't get communicated to the public in a very good way. And apparently there's, I'm sure each individual broker has a responsibility to their clients to kind of break that down. And then, of course, there'll be those out there who don't know what a stock split is. All they know is they own some shares Friday that were trading at $2,000. They come in this morning and they see that it's dropped to 500. Sell, as Kramer might say. So, yeah, I thought it would respond well to this split, but you're more the go-to guy as far as stocks go, so we'll follow your lead on that.
Well, you were right. It has actually, and I was thinking about that this morning. I mean, what it tells you is this is a much more powerful market than the 2000. Remember, a lot of these stocks that split were garbage, and went south as a result of that. Remember, we didn't have the juggernauts that we have today that are doing. Amazon is like, a global company of monumental proportions that is
Here's a 30-minute on
stronger.
Tesla. So since the open this morning, did get a little sell-off early on, and then it's no wait. No.
So you have to, that's why I looked
No,
at.
it's been straight up. Yeah, here's the open right
that's
here.
That's why I looked at the the comparison 2016.
Now,
Where
guys,
we are, where we're going.
Yeah, I'm sorry.
And look, the funny thing is that after all these polls came out putting Trump 10 points or more behind Biden, all of a sudden some polls came out yesterday or the day before and put him, 5 points ahead or even 10 points ahead. So the market is likely to continue higher as long as that continues, as long as that's going on. And ultimately, look, I started thinking about the S&P going to 4,000, maybe even 4,300, 4,400, something like that. You just can't rule this. I mean, the Dow goes to 30,000, probably going to go to 33,000 in a kind of a blow off. So you have to be mindful of these things. And the thing that nobody's seeing coming right now, obviously there's a lot of people, unemployment and the economy in general is not what it used to be, but the potential for the economy to come from behind, based on where the market is today and how it's portending higher prices or a bigger, stronger economy. I mean, it sort of amplifies our view that we could, if we have 10% growth, which we haven't had since World War II, probably. I think the last 2 years of World War II, the economy grew at 20-25%. And why wouldn't it? They were making 10,000 planes a month and building a ship every 3 days, 17 hours. It was an economy like never before. And as it was in the final couple of years of World War II, it was like wound up at a pace that's never been seen before. So those are the possible growth rates that we could experience going into the end of this year or 2021. And they're more than likely going to be inflationary, and the Fed may be forced to raise rates, which would be very bullish for the metals if that's the case. And they kind of, hinted in the last few days that they would take appropriate action if that became the case. So, and at the end of the day, what would be very bullish for a kind of a blow off top is, today actually, I think, the bonds are rallying today for the first time in a while. That's a little bit of a danger signal, because as you know, they've been going down. The economy's been getting a bit stronger.
To the December contract?
You know what? I haven't. I'm on the Z. It's a Z rather.
Yeah, the Z is the next one. Yeah, Z is that's the one. Silver rolled to Z, 10-year notes.
Yeah. So, but the fact that there is that's a kind of a negative, but it's not. It's not necessarily a total negative, but it's a little bit of a warning sign that there could be a pullback, especially if they continue to go higher and higher and higher, because it would be, ultimately I think there's a possibility that we could go back and test the highs of the bonds if there was a shakeout in the next couple of months. That would be the ultimate top. It would be the end of the 40-plus year bull market, and we'd be in a whole new ball game where interest rates actually, go higher over the next, maybe for the rest of this decade. So it's, as the economy, assuming we come out of this intact and growing, that would be a logical thing to happen. And a lot of the things that people say are bad, like the velocity of circulation and all these other indicators, might actually kick in and become very bullish. So, and I mean, it's we've been talking about this for a long time. The similarities between the Roaring 20s and the 2020s, the Roaring 2020s, and the Roaring 1920s, and all of a sudden you have all these electric car makers coming out of the woodwork, which are very similar to the 150 or so car makers that were all competing to become GM and Ford back in 100 years ago. Is really kind of like history repeating itself, and we're going to get flying cars. There's a new plane. There was a plane. I don't know if you saw that plane. It's called a bullet plane, I think. It's an electric.
What's it called again?
An electric. If you Google bullet plane, electric bullet plane, bullet shaped electric plane.
Bullet plane. Revealed? Maybe that's it. That's it? The whisper started 3 years ago. A mysterious bullet-shaped plane was spotted.
Yeah, I mean, look at this thing. It's a very economic, very fast, and could revolutionize small jet, small planes.
Yeah.
And it's got a 4,500 mile range or something. Unbelievable.
4,500? So this thing can
I think
fly
so, yeah.
coast to coast, huh? And how far are we, or how close are we to production?
That looks pretty close. looks like it's happening.
Where's this company based out of? Because there's an electric plane company that Tim first alerted me to up in Prescott. I can't remember the name of that company right now. But anyway. Okay.
Victorville, wherever that is. Oh, Southern California, there you go.
Yeah. So let's take a look at where gold is. Okay. It's 30 minutes. Let's go to a daily.
Yeah, I mean, the gold itself is to be closing this
trend line that we drew last week. We closed above it Friday. And so now if we can take out that swing high from Thursday, so basically 1982 up to 2000. Yeah, 1982. So there's a potential $18 move in gold. Gold pays $100 a point, so trading futures, one contract, if we do that, if the market makes the trip from 82 to 2000, and if you look left, there's no obstacle, guys. Nothing to get in the way. It's $1,800 per contract traded. That's what's possible. Okay.
Check out the silver. See what the silver looks like.
I will do that. Tim just gave me the name of that company. It's called Aviation. It's like aviation, but it starts with an E for electric. That's clever.
Thanks, Tim.
Okay. Here's silver on the daily chart. So we got some potential resistance overhead at 28.46.
Yeah, this thing is really looking like it's going to break through 30, actually, and to pull the gold up with it.
29.10.
I mean, let's look at this. Look at this, the weekly and the monthly doing. By the way, this is the best month in 30 years for the stock market.
Yeah, I just mentioned that earlier. I saw it flash on my screen here.
Yeah, actually, that reminds me. I was going to mention something else. If you probably, I haven't done it yet, but if you go back to 1984, I think that was when it happened. We were just beginning a liftoff that went so far higher, it was hard to contemplate.
Here's the weekly. Silver with candles, and then the line is gold.
So is that
That's
a monthly?
It's a weekly.
Oh, weekly. How about the monthly?
Let's take a peek. Now, What's your thoughts there?
Well, it's hugely strong, you know. I mean, it's probably going to go up and test the highs and maybe take it out. I mean, there's a little bit of resistance there at the highs still. But the weekly looks pretty hot just in of itself.
To the weekly. And then back to the daily.
I mean, look at that.
It
really looks
pretty incredible, right?
Yeah.
Pretty incredible.
Yeah.
Aviation.
Yeah, I think it's where I have to go back. I'm pretty sure, you know, the thing about from 84 to 86, 87, I mean, literally we went almost nonstop from 84 right up to 87. So given that this is the biggest in 30 years, it's certainly, you know, what is it telling us? It's probably telling us the market could go beyond anybody's expectations to the upside.
So there's monthly on silver. $50. Now guys, we talked quite a bit a few weeks back about the fact that, you know, just logically, just looking at a chart, no fancy footwork, the potential for silver to double ahead of gold doubling, I think is very realistic.
Yeah. Well, if you go back to 2008, late 2008, we were $10.
Here's 2008 right here.
Yeah, we went up fivefold, and just go forward again to the dip we just had. We talked about this before it happened, Dwayne. Look at that dip. You know, we said that this dip was like the lows in 2004, and we went up 11-fold from that low.
Built this huge base, and one little dip, everybody loads the boat, and here we go.
So, you know, it actually projects this thing to 55 to 65. We stormed just a fivefold upward off the lows.
Yeah.
50, around about 60. And if it's 11-fold, you know, we're probably going to be 11.5-fold. We're probably going to go to 135. So it's really a, you know, pretty big deal, especially the way it took off.
Yeah, on the monthly chart, next, you know, major resistance is about 34.69. We're sitting at 28.27 right now. You know, what an incredible opportunity that represents.
Yeah, so it is a historic day, you know, making new all-time record highs in the NASDAQ on the last day of the month, August. And as I said a few, you know, points ago, 30 points ago, it still looks like higher.
Yeah.
Now, we've got to get through the, you know, on a day like today, with the Dow underperforming and the S&P underperforming and being dragged down, you know, you've got to be careful because there's always a chance the NASDAQ could go south. So it's nothing is guaranteed. But you have to just go with the way the markets are telling us. So certainly.
Anything else you want to look at?
The thundering herd from Robin Hood, or whoever was making this happen, probably got more buying power still ahead of these things.
Yeah.
So, thanks very much for the invite.
Hey, thank you, John. Always
all the best.
Talk to you tomorrow.
Likewise.
Okay.
Likewise. Bye.
Okay, guys, back to the NQ chart. I went ahead and notated it while we were talking. So we had a Concierge Trade Alert, or as we refer to it, a CTA, Concierge Trade Alert. to be long 12055. We had a logic alert to be long 12025. This was the logic. Okay, this was part of the static report. Okay, here's the logic alert, and the concierge alert here. When the concierge comes out, best thing to do is go to your chart, put 2 lines in the sand alongside the short side. Okay, everything in between those 2 lines is the market trying to just make up its mind, you know, what it really wants to do. But as we're on our way to the CTA, logic will often walk you right up to the doorstep. Okay, so from 1225, from 120.25 up to this swing high at 91. Oh, that's, well, it's better than $1,000 per contract traded. Now, this concierge trade alert to be long 12055 triggered once, twice, 3 times. We're on the 4th trigger right now. When I measured it a second ago, it was 57 points, $20 a point, $11.40 per contract traded. But I marked this one as not valid. Why is that? 12055 is 12055 all day long, right? Yes, this is why it's so important that you not trade an alert just because it's an alert, but because the structure of the market supports the trade. Now, if I put the indicators back on, you'll see exactly what I'm talking about. Okay, remember blue and climbing, that represents bullishness or support. Now up here you'll notice after this nice move up, price stops climbing and it starts to walk sideways. Now when this move started, you'll notice that the step line, this little black line, looks like a set of stairs. Step up and over, up and over. It's walking up the left side of blue and climbing. Price is way to the left of blue and climbing. Okay? Then sideways walk. And we had that same sideways walk on Tesla. I was going to point that out. Let me do it right now while I'm thinking about it. Tesla, 30 minutes. See how we started that sideways walk? Now we just had a little bump in price since we were looking at it a second ago. So that will happen sometimes. Okay, you'll get the sideways walk and then you'll still get another leg. But we didn't get another leg here. Now this red candle, that's what we call the exit signal. You see, getting out at a swing high or swing low, that's hard to do because you don't know that it is a swing high or a swing low until after the fact. So whether you got long at 12.025 per the alert or 12055 per the alert, when price starts to walk sideways and the step line itself gets on the right side of blue and climbing, okay, all conditions are bullish, and then the first indication things are changing. Price walks sideways, the step line goes from the left side of blue and climbing to the right side. So on a long trade, what we're looking for is the first red candle that closes below the step line. Like that. The closing price of that candle is 12.82 1/4. Call it 12.02.25 exit signal. So if you got long at this published entry or this published entry. Now, we had targets on the way up. From the entry at 12.025, the initial target was 12.035, and then potential resistance at 12075. So we had a pullback. No, we hit that final target, 12075, right there. So from 25 to 75, that's 50 points at $20 a point. That's $1,000 per contract traded. 25. Initial target, 35. Next target, 75. So we actually sailed through and then got our exit signal about 5 points, 7 points above. Now, the reason there isn't a final trade to target there is because this alert was issued early last night at the beginning of the session. And on Sunday nights, we're using the previous week's weekly trading zones because the new ones haven't been published yet. The NQ closed above the highest weekly trading zone last week, as did the S&P. Okay, the Dow didn't. The S&P did. It's a rare occurrence that we close above the highest weekly zone or below the lowest weekly zone, but occasionally it happens, and last week it did. So, there was an opportunity to be long here, off this trigger, or here on this trigger at 25, this trigger 55, and you had an exit signal, and you get back below the trigger. So why does that say not valid? Okay. Because market structure's changed. Over here we had blue and climbing, which makes you want to be long. But over here, when we triggered, red and falling represents resistance. So that's almost like driving into a brick wall. You don't want to do that. Now, sometimes price can just trade right through red and falling, but on the 30-minute chart, it's pretty rare. You know, do some research. Look at your historic charts. Usually what will happen is red and falling will come back to the BBC, and if you're not going to get a bearish cross like we got here, then it'll turn, and so once what happened, price came up to red and falling, couldn't get through it, and then red and falling blended right in to the BBC, turned into blue and climbing. Now all systems long. Here, not valid. Here, we have now gotten back above the BBC. We've got blue and climbing below us. So again, all systems long. So we get this trigger, runs up about $900 per contract traded. Back below the trigger, but we're still above the BBC. We still got blue and climbing. And there we go. When I measured it, it was 57 points. It's about $1,100 per contract traded. $20 a point. Okay? All right. So we jumped forward to the NQ because John was talking about the NQ. But every one of our traders had both of these opportunities last night, whether you're trading logic, whether you're trading the concierge, whether you're waiting for the two to each point their own finger at the same important price, important area. This is the opportunity. Okay? 1, 2, 3 valid triggers, and 1 that you would want to avoid. And this is where we opened for the Globex session. Okay. All right. Now we looked at the S&P, and we know there was no second trigger on the long side. If there had been, like on the NQ, we would have not been interested because we were dealing with red and falling. Okay? Now the short side for the S&P last night was 34.92, which is way down here. And the market ran out of steam to the downside. So the swing low was only 34.90 and a quarter. So it's like 1 3/4 points. we've now bounced back up to the BBC. So the high probability move from here back down to the weekly trading zone. Now, we had an alert this morning during a live trading room that came out, which was from 3502 down to 3500. Okay. Now this CTA, everything was in place. Okay. The issue, and it concerned me this morning, and I talked about it in the pre-market strategy session. This represents potential support. The area on your chart where you have a bullish or bearish cross that leads to a substantial move, when price revisits that area, it's a high degree of probability that it's going to be good support. And so, if we draw that across there, in my calculations, I thought I had gotten low enough below that because we expect it to be support. It was support. Yeah, I was just off. Yeah, I'm not afraid to admit that. There is no, the only perfection that exists in trading is knowing what to do, when to do it, and then doing it. That's trading perfection as taught by Mark Douglas, who wrote the book Trading in the Zone. Okay. The business of finding some way, some indicator, some chant, some incense to burn, whatever, to prevent you from ever having to be stopped out. You got to give that up. Whether you learn our simple methodology and strategy or not, you got to give up the thing that I promise you doesn't work. And by that I mean trying to find a way to never get stopped out again. Joan asks, so the third trigger in Q, there was no exit before the fourth trigger, so you would stay in. Well, let's go back and take a look, Joan. Okay, one trigger, two trigger, three trigger. You could have stayed in, or you could have taken profit. I'm showing you what the market did. Price ran up $900 per contract per trade. It also ran up to the area that we would expect to be good resistance. See these highs? Price ran into resistance, and when price hits resistance, it will reverse and go look for support, which it found at the BBC. And when price finds support, it will then go look for resistance, which it hasn't found yet, because on this move, it traded up through that resistance. So I think most traders would have taken profit here simply because it's only logical that that's going to be resistance, as we see that it was. Okay, and now we have another bullish cross below us. We've got blue and climbing, and anyone that is still in this trade, there is no exit signal as of yet. Hopefully that answers your question. If not, ask again. Okay, now on this potential short trade coming up here on the S&P, there's only one small fly in the ointment, and that is because we consolidated so much. We didn't just pop up, you know, and then get a continuation of the leg. Kind of sideways it up into here, so we've got blue and climbing. Now, I would want to be below the low of this candle, below the step line. And so 35.03 on the next candle, if we start printing red, 35.03 down to 35.01. Because remember this zone, 34.99/3500. Now that's a this week zone. 34.86, that is a this week zone issued this morning to all of our traders. this one down here, that's from last week. Okay, so by tomorrow I'll update the zones on the charts. And the important ones from last week, I'll highlight those in yellow, so when you look at the chart, you'll know which is which. A lot of times traders want to keep this week's zones and last week's zones on their chart. You know, if it doesn't feel too cluttered for you, you can do that. I think the best idea probably is to get this week's zones on your chart and then keep a notepad right beside you that has last week's zones on it. Okay. So we're at the BBC. Whenever price approaches the BBC from below, we expect it to be resistance. So whether I put out an official alert on this or not, that is the high probability move. Now, the only thing that would change that would be price closing above the BBC, because if that happens, then we have to start anticipating higher prices. Where would we expect resistance? Well, you've got a bearish cross here, and you've got this swing high right here. So that area, right? So what I'd like to see is for price to, you know, if that's what we're going to do, I'd like to see price pop up, pull back to the BBC from above, it holds, and then we get our trade to the long side right up into this area where we anticipate resistance. But what you're seeing here, bearish, bullish cross, which all these hours later leads to support. If we move higher from here, what you see here is most likely what you'll see here. Price trades from support to resistance to support and back again. Always has, always will. It's just how markets work. Okay. Now, on the Dow, last night's alert, Concierge Trade Alert, was to be long 28765. 28765. Almost at the end of the move. 28765, and the swing high was 83. So came within 2 ticks of hitting the initial target. 20 points, $5 a point, $100 per contract traded. The short side for the Dow was 28550. 28. Let's get this out of the way. 28550. All right. 28. Okay, now that yellow line, that's a zone from 2 weeks ago. But you can see that it was still in play, you know, right up until Friday. But it's been 2 weeks, so we're going to take that off the chart. That was last week's highest weekly trading zone. And while we didn't get there last week, we came ever so close last night. Now, $28550. Now this zone, 28,440, that is a this week zone. $440. Okay, so from 550 to 440, that's 110 points, $5 a point, 150 or $500 per contract traded. We consolidated at the zone, and then we continued on through to the area that we expected to be good support or potential support, which is right there. Support, support. Now we're bouncing up to a weekly zone. Okay, we anticipate this to be good resistance. We're not going to just sell it because we're at the zone. We're going to wait to see if we consolidate, and if we start to head down, then we'll have a nice window of opportunity in here. Okay, if price manages to get above the zone, then once we get up to the BBC, or even potentially we could come up to the BBC, spike it, but either way, move to the downside. Okay. Now from 550 to 440 is 110 points, $5 a point, but it did continue on down to 28. We'll call it 28,355. So 550 to 350, that would be 200 points. $5 a point, that's $1,000 per contract traded. Okay. Now this was the trade to target. Okay. 550. So you had the entry, you had the target. Price consolidated, but we stayed on the left side of red and falling. The step line stayed on the left side of red and falling. So had you chosen to stay with this, okay, you could have definitely taken more out of the market, but by the time the exit signal printed, you still had about another 20 points in there. Okay. All right. So let's pick up the pace here. Go to the Russell. Okay. All right. All right, on the Russell. Last night's alert was to be long 1588, which was right at the top. Swing high was 1589.80. On the short side, 1569. From 1569, that's last week's zone at 64. This week's zone is actually at 66. So it's about $150 per contract move. We got back above the trigger, did it again. We could be about to get above the trigger for a third time, and we may get a third opportunity. As long as we've got red and falling, that supports, and prices below the BBC, that supports lower prices. Okay. All right. And we've already covered the NQ, so we can jump straight to crude. Last night's alert on crude, long 43 1/4. Get rid of these. So 43.25. That's it right there. So from 43.25 to 43.55, it's $300 per contract traded. The price went from the zone up to the zone, back down to the zone. Okay. The short side for crude is 42.85, which we're just now getting around to triggering. $42.85 right there. So we hit the zone, spiked it, bounced, down we come. Now look for potential support. See this swing low, 42.70. And if we look left, we can see that we've got more potential support here at about 42.40. Okay. So if you're in this trade short to the downside, keep those numbers in mind. 42.70 and about 42.40. Okay. Those are potential downside targets for that move. Okie doke. Gold. What a ride. Long side for gold. Concierge. 1986. And the swing high was 1985.8. So that one did not trigger. And then on the short side, 1957. Which did not trigger. So that's sideways gold. Silver. The alert on silver was to be long 28.25. Alright, so the initial move on silver, 28.25, took us up to, we'll call it 28.45. So that's 20 cents. $1,000 per contract traded. A $1 move in silver pays $5 grand. A $1 move in gold pays $100. A $1 move in silver pays $5 grand. Okay, so that's $1,000 per contract move. And then we got below the trigger and almost did it again. These triggers got red and falling overhead, so best to avoid. We get a bearish cross, more of a head fake than anything else. So we trigger again, but this time we've got blue and climbing. This time we're above the BBC. And then we get a trigger, we got a trigger. Now the trigger was 28.25, and we traded up to 28.65. So that's 40 cents. It's $2,000 per contract traded. $1,000 here, $2,000 here. That's what the market made available. Now, we provide the alerts. The market does the heavy lifting. Okay? No indicator, no oscillator, no methodology or strategy moves the market. People try to convince you, but please, you know, keep your hand on your wallet while you're listening to that kind of stuff. Only one thing, and one thing alone, moves price. And that thing is this: buyers and sellers. The order flow. If there are more buyers than sellers, price is going higher. If there's more sellers than buyers, price is going lower. Well, it can't be that simple, you know? Amazing that it is, isn't it? Buyers and sellers control price. Now, these buyers and sellers may make their decisions based on indicators and oscillators and strategies and stuff, but it's the decisions that those buyers make and the mouse they click. Order flow. And you never know when order flow is going to change. You never know when some trader from Goldman Sachs is going to belly up to the bar and order 10,000 silver contracts or sell 10,000. It's unknowable. And that's another area where so many traders spend so much time and treasure trying to know the unknowable. better that you spend your time and treasure focusing on what you can know and what you can control. You can't control the market. You can't control price, but you can control your behavior. Discipline, self-control are two of the most important tools in your trading toolbox. That's what's really going to ultimately define, once you have a definable edge, once you learn a simple methodology or strategy like we have, that's going to control the outcome. Okay? All right. Okay. We've done it. S&P, Dow, Russell, NQ, Crude. If you are ready to become a passport holder, if you're ready to start trading with us, if you're ready to learn our very simple methodology and strategy on our indicators, have access to everything that we do, everything listed here. It's so simple. It might even be simpler than our strategy, if that's even possible. Go to EminiFuturesTrading.com. EminiFuturesTrading.com. Let's go to our good word for the day. If you have any final questions, just put them in the chat box. We talked Friday about how to negotiate well. Life's full of negotiations. Today we'll talk about your dream house. Do you have one? We have a building from God, an eternal house in heaven. 2 Corinthians 5:1. Few things in life compare to the excitement of moving into your dream house. But if you're a redeemed child of God, here's the score. No matter how beautiful your dream house on earth may be, it's nothing compared to the one we all have in eternity. John 14:2. Jesus said, "In my Father's house are many mansions. If it were not so, I would have told you. I go to prepare a place for you." When it comes to the house we want to live in, certain questions arise. First, what's the price? What's it going to cost? Well, the answer, when we're talking about that mansion that Jesus promised, in my Father's house are many mansions, the answer is more than you could ever afford. What's the old saying? If you got to ask, you can't afford it. Okay. In order to redeem you and take you to heaven, God gave His only begotten Son. John 3:16. Nobody in heaven will ever say, "Look what Jesus and I accomplished." That would make you a co-redeemer with Christ. It would be an insult to the cross. You'd be guilty of a level of pride that would make it impossible for you to live there. An old hymnist wrote this: "Upon a life I have not lived, upon a death I did not die. Another's life, another's death, I stake my whole eternity." The Bible speaks of laboring and working for God. But don't get it mixed up. You don't work to be saved. You work because you are saved. You don't labor for your redemption. You labor for your reward. That's so. God can point to us in all future ages as examples of the incredible wealth of His grace and kindness towards us. Ephesians 2:7. That's our good word for the day. And we'll talk tomorrow a little more about your dream house. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.